The market is heading into its biggest week of the year. It's going to set the tone for the coming weeks, months, and we are going to cover as much of it as we can today. Before we get going, please hit that like button, subscribe to our channel. Nothing we say today is financial advice. Please do your own research. We're just a couple guys who enjoy talking about the markets, looking over these things, talking about the macro, and we're going to do the best we can to, give you as much information as you need. So, Kevin, huge week incoming. We have FOMC meeting on Tuesday and Wednesday with the announcement of the rate hike Wednesday, as well as Jerome Powell's presser. We have a new batch of jobs data on Friday. There's not a lot early in the week as the Fed heads into the meeting, but we do have some reports on Thursday. But the big one is on Friday with the unemployment data, and that will probably heavily impact the March FOMC decision and what they do there. And then we also have an unbelievable amount of earnings reports this week. Something like 20% of the S&P is reporting in this 1 week. We'll go through a few of look at a little bit of that, but getting a better idea for the health of some of these companies as we head into the new year. So what do you have your eyes on? Where do you think things are headed? Because the week has started off volatile to the downside. It's it's so much fun. I'm loving what we have going on this week.
Oh no, absolutely. This is so exciting because this could go either of two ways. And since we've been seeing pumps nonstop for the past month, this will be really interesting. I think a lot of people this will be interesting, following the psychology of how people are going to be trading this event. People who are in the market right now for this FOMC meeting, it's going to be wild. You're going to see mass liquidations in both directions. I wouldn't be surprised if you see $1,000 swings for certain coins. I mean, not certain coins, for Bitcoin. Bitcoin's going to swing probably 1,000 range. I'm really excited. I saw the Dallas Fed this morning came out and said that there's a recession on the way. I looked over some GDP data over the weekend. I looked over some of the PCE, some interesting stuff that hasn't been brought up, and I'm really excited. I think I shouldn't say I'm excited because I'm bearish and I expect the market to be going down, but I think there's going to be a lot of information that's going to enlighten us onto what the actual outlook is for the macro this week, and it's going to be really interesting to see how the markets react.
Yeah, I think if you're actively trading this week, this is one of those tough weeks in my opinion where you have to you got to be willing to take your wins and cut off some of those losses because things are going to move quickly and violently. There's going to be a lot of swings over here, and it's going to be pretty crazy. We've seen huge run up in a lot of these tech companies to start the year. Tesla is up almost 70% on the year. We've seen Meta have a solid recovery from their lows, and the bottom signal that was Jim Cramer crying live on CNBC about how disappointed he was. They're reporting earnings this week. That's going to play into it. Real quick, I'll just run through some of the companies reporting this week. We got Apple, we got Alphabet, we got Amazon, Facebook, Samsung, AMD, Pfizer, McDonald's, so many. And so we're going to get a look at so many different parts of the economy and how they're being impacted by everything that's going on, and not just their Q4 results, but also their forward guidance through the rest of the year, and how we've seen the layoffs happening, but how are they really preparing for 2023, and have they changed their outlook is going to be a huge part of it as well. So we have that FOMC Wednesday. It is at this point almost a sure thing it's going to be a 25 basis point hike. That's what the market is expecting. That's what the market is priced in. If it's anything more than that, the market is going to eat shit. And what's been interesting, last month we saw a run up. The market kind of pumped a little bit after the rate hike came out, and then it dumped when Powell started talking, and that kind of had flipped from the previous few FOMCs. Most of last year, we saw this pattern where the market would kind of take a shit after the rate hike came out, and then Powell would talk and he'd be a little bit more dovish and the market would kind of calm. This time, with how much things have ran up so far this year, the fact that inflation is still high, the job market is still very strong, I would not be surprised if we saw the market not respond well to the rate hike and then also get worse after Powell speaks. I'm not trading the market, so I don't really have any skin in the game from a day trading perspective, but that's just kind of my thought is, the Fed sees how strong the stock market is. They see how strong the labor market is. they're going to do the 25 basis point hike. There's some people saying that it's only going to be 1 or 2 hikes this year. I wouldn't be surprised if we saw 3 and then a pause. But I think Powell is going to have to come out and, be very hawkish again, because we are seeing such a strong start to the year in the stock markets, in the crypto markets.
Yeah, 100%. Like, for me, the most important things for Powell are obviously the labor market. The labor market's too strong right now. We're seeing wages continue to rise up. That's what I saw in the PCE data that came out. What was it, Friday? We saw that, it came in above expectations just because wages are going up. Not necessarily a great thing for inflation. That just means that the price of goods is going to go up as, you have to pay employers and you have to make money off the products that you're selling. Not great. It's just, I don't expect him to be dovish in any way. I think even the Fed came out and said last month that they're going to be raising rates all throughout 2023. So anyone who thinks there's going to be a pivot on this or 0.25 basis points is bullish. I think that it might be priced in, but I think more than anything, a lot of people are priced into this market right now. I think whether it's good or bad, the number, you're still going to get some hawkish sentiment from Powell. And if everyone right now is going long and expecting it to be 25 basis points, and we're hoping that, it's going to pump from there, obviously money is not going to follow what the majority of retail are doing. It's going to follow where there is more money. Liquidity is going to build below as people go long. It's just the way it is. And I think that this is going to be a massive way. And I still think that Powell is going to be hawkish. Whether it's 50 or 25, I think it doesn't matter. I still think the market's going to react negatively, if not immediately, within the week as more data does come out.
Yeah, and here, okay, I'll give you a preview of what Powell's speech is going to be. You ready for this? Okay, here's what it's going to be. Chair Powell, what do you expect the Fed to do moving forward? Well, we are going to continue to look at the data that is presented to us and make our decisions accordingly. That's the same thing he said every time for the last 8 meetings. That's exactly what we're going to hear again. He's not going to tip his hand. They're not going to be oh, well, we're going to raise one more time in March, and then we're going to pause, and then we're going to pivot. He's not going to give no news that nothing he's going to say, in my opinion, is going to be overly dovish for the market. It's going to be the same shit that he has said every time, because that's what they're doing. They're looking at this data. They're seeing that, the unemployment rate actually went down last month when it was reported. The expectation this Friday is for a 3.6%, which would be up, a tenth of a percentage point, which would be right back to where it was, back in November. So it's just if it comes in at 3.8%, okay, the market could get hot on Friday. If it comes in at 3.5 or God forbid lower than that, then the market's going to dump again, because it's going to be very clear that the Fed may need to go to a 50 basis point hike again. So I don't really understand what people are expecting Powell to say besides the usual shit of we're going to keep looking at the data that is presented to us and make our decisions accordingly.
Yeah, I mean, like you said, he said it for the past 8 meetings, maybe even more so. There is that one meme on Twitter I saw where he says literally the same exact thing every meeting, and you can tell because only his tie changes in the video. So it's him, but it's just a different day. But that's exactly what we're gonna get. This guy, a lot of people hate Powell and stuff like that. I really don't care, to be honest. At the end of the day, they're gonna do their job. I think he has a better understanding of what's happened in the past with inflation. You can't let as the inflation number is coming down, but he still sees that the labor market and wages are continuing to grow. I think that is pretty evident that that's a good chance that we will see an inflationary spike in the future. So they're not going to pivot. Let's put it that way. We're not going to see any pivot or soft landing right now. We got the Dallas Fed, like I said, coming out earlier today and saying that we are going to be seeing a recession. So if we start seeing this all around the country, and other Feds are saying that, and then this guy is going into it seeing that the labor market's not coming down, I don't know. This is going to play out a lot longer than it needs to, and it's going to play out as long as the Fed sees fit for it to play out too.
Yeah, and if they continue to see that the markets are remaining hot, both job, stock, all that stuff, they're going to have to put the hammer down at some point. We discussed it, whether it was last week or the week before, but we can't have another situation in the 70s where they stopped too early and things went to shit for a decade. That is the worst case outcome. And nobody wants that. Give me some short-term pain, whether that's 6 months, 12 months, 18 months, if it means that we don't spend all of 2020 dealing with this shit over like just a never ending cycle of the same old bullshit. Like,
Yeah.
we'll get back to a bull market someday. If it takes a little bit longer than everyone was hoping, but it means that we don't keep going through the same fucking cycle, I would prefer that. Let's just like rip the Band-Aid off. Let's get these, numbers in a better place. Let's do what's right for most Americans. Because right now, like, people are hurting, man. Like, that's part of why I had to close my business was like, people don't have, when people are spending $7 on a dozen eggs or, $8 on a gallon of milk, like, their quality of life in many ways is going down. And so, like, we just need to get this shit over with.
Oh, 100%. I couldn't agree more, man.
Yeah. All right. Let's move past that. What else do you want to discuss before we get into some of the technicals?
The one thing I saw over the weekend was liquidations. Again, we saw Bitcoin on Saturday into Sunday make a pretty good run up. We saw that it shot all the way up to, 87 million liquidations over a 24-hour period. And while that's obviously $87 million is nothing to, to dismiss. That's a good amount of money. It's not what we were seeing during the days of the FTX and even in between then and where we were before we started pumping. And even in the pump, we were seeing $250 million like enter in and out of liquidations, short squeezes, all that stuff. 87 million on a pretty good like $1,000 move to the upside from Saturday into Sunday, and that's all we saw. It's pretty weak in my opinion. I think that shows that a lot of people might not necessarily be shorting the market at this point. They're just tired of getting wrecked. So a lot of bears are just sitting on the sideline. You're seeing lots of capital there. We're seeing even on longs versus shorts, I believe it was like 52% long across all exchanges for Bitcoin and 48%. I'm like estimating, like rounding up, but it was like 48% short. And that's a pretty good difference. That's a 4% difference between the two. So that just shows that so many people are going long into this. And I think that paired with, the 25 basis point hike that everyone's pretty much anticipating that everyone's saying is priced in right now, that tells me that there is so much money. The money is down and it's not up. So in terms of liquidations, it would be more beneficial to people who are trading like institutional wallets or, market makers, people who have tons of money and they obviously know that it might not necessarily be great. It'd be more beneficial to them to make short-term cash by liquidating positions currently by pushing the price down, whether that's selling their assets or flooding the exchanges to a point where, the supply outpaces the demand. And then we just see all that price come down and everyone who's super long just gets liquidated or they have to close their positions. So that's one thing I'm really saying, because after the price dropped last night, it was like $116 million. It's currently at 116 million, which means that there is more money to the downside than there is to the upside. That might be signifying that we might be at a reversal, or there's just tons of money to be liquidated over the course of this week.
Okay, let's get into some of the charts. We'll start with the DXY like we always do.
Wonderful.
I could definitely. I know you've been saying for a while that the DXY is oversold. You're expecting it to see a run back up, and I think that that lines up quite well with Powell's presser on Wednesday. And if you're watching for the first time, you're watching us back, we've just been beating the drum for a while that like there's nothing wrong with having cash right now. I know that you got to adjust your strategy back when everything was pumping, late 2020 into 2021. You didn't want to be holding a ton of cash because you were missing out on opportunities. Now, we've seen a nice little pump. I'm not telling anyone to sell anything because I don't give financial advice. I'm just saying that me personally, I've been trying to slowly move some more assets into cash on this nice little run up we've had here. I believe that what we're getting right now is kind of a blessing from a liquidity standpoint to get some money out of the markets, because it's only a matter of time until some sort of pullback happens.
Yeah, I couldn't agree more. This has been a wonderful opportunity to exit the market for a lot of people who had bought a lot lower.
Yeah, like it's been a fun 4 weeks. We've had a nice time. We've had green candles. We've had green days. And you know what? It's okay to take I've said many times before, you can dollar cost average out of the market just like you can dollar cost average into the market. And these last few weeks have felt like a really good time to take a little bit off the top.
Definitely. And Yeah, I mean, there's nothing wrong with, you will not go broke taking profit at some point. You know what I mean?
And
You're gonna
our guy Ace here is right. There's a lot of FOMO in the markets right now. Ace, I hope that you're able to get some money for this copper that you've been hoarding to buy the bottom whenever it comes in. But let's get into DXY here.
wonderful. So we're looking at the weekly. Obviously, we've been talking about oversold for so long. I mean, we're at 1.82, 1.19, 1.19, and obviously we can go all the way to 100 to being overbought. So we're pretty much at the point where it's like you have a ton of headroom to move up. So that's looking good in terms of the macro, in terms of the weekly. Obviously, we've been trading at this sideways for the past 3 weeks. Came below support, came above it. I still say this little liquidity level down here wouldn't be. I wouldn't be surprised if we see a wick down to it, mainly because I look at the daily, and the daily is coming up pretty fast right here. Again, I think that a lot of this is going to change once we get some perspective from FOMC and a lot of these earnings that are coming this week. A lot of people are just right now not sure what to do, whether to be in cash, whether to be in assets. But we're moving sideways, and I think this is great because we've been moving down since September, and it's been pretty nasty, and it's not fun. But we've been consolidating, moving sideways while risk assets are going up, which tells me that the demand for risk assets might be not necessarily as strong. Obviously, the dollar's been dropping for so long that the price of risk assets are going up. But I think that there's a lot of people who are still cautious and might think that, cash might be the best option right now. So that's why I think that we're holding sideways. A lot of people are holding on to their DXY positions. But yeah, I mean, probably going to go up a little bit higher, probably get rejected and come back down into this liquidity level, or even find support here, which means we'd be putting in a higher low at this point, coming back down. And hopefully that's a sign of some bullish continuation from the short term into the long term for the DXY. But this is extremely interesting. If we do see a pump here, though, I wouldn't be surprised if this 50 comes back above the 200. If this 50 comes above the 200, whether on the daily, obviously it's short-term bullish. We're probably not going to see that on the weekly 200, but I wouldn't be surprised if we come above those two EMAs, these two cross again, and we get that reversal, and that's the bullish continuation for me. That means that the DXY is probably going to explode. A lot of people are going to feel more confident in it and in its strength, and we'll probably see it move to the upside. Like that paired with all the macro and everything like that, this thing is just primed to pump. And maybe we're just early on it, how bullish I am, at least, how big this is going to be in the next few months. But I do think that the U.S. dollar is going to gain a lot of strength against the markets in the coming future.
Okay, let's move into Bitcoin, and then we'll go Ethereum. I think those are going to be the two main tokens we talk about today.
Absolutely. So main thing I wanted to talk about for Bitcoin is we closed. This is the daily. I need the weekly. There we go. Let me just eliminate this channel. Just unlink that.
You got a lot going on there, Kev.
Oh, 100%. I was just, I was having tons of fun last night, just playing around with my lines and my parallel channels, my Fibonacci retracements, all the fun stuff that the kids are doing when they're 25 years old.
What's the correlation between like people who loved playing with Etch-a-Sketches when they were kids and people who are now like do technical analysis? Is it pretty much like 100% correlation?
Oh yeah, you're pretty much doing technical analysis when you have an Etch-a-Sketch, and then when it doesn't go your way, just shake it until it does. So
there you go.
Yeah.
Man, I wish we could do that with the markets, but alas, we cannot.
Yeah, the market makers will shake all the bad actors out soon enough. But here we are. We came up to the 200.
We got A's dollar cost averaging copper. I love it. This is just. When Ace is our overlord at the next super cycle, because he has all that copper money that he turned into crypto at the right time, there'll be no surprise whatsoever.
He's going to be the copper king. He's just going to be walking around with the Iron Throne. It's going to be the copper throne.
Oh, dude. Right. No, because he would sell that. Why would he have the copper throne when he would have sold that copper to make money to then, buy our tokens for cheaper?
Well, that'll be his long-term hold. He has so much copper. He has a long-term hold. All right, let's get into this. 200 EMA, we hit it on the weekly, and we came above it. And last night I said, oh, wow, we're going to come above it, and this is going to cause a ton of long positions to open because people are going to say, oh, once we're above it, we're in a bull market. We did close above it. It's very hard to see, but it was just enough right above it. And then within today, we came all the way down. So we got a nasty rejection off that on the weekly. Again, can this change? Absolutely. This could just be a whip down. But for me, that tells me that the 200 EMA continues to be resistance. If you're not above the 200 EMA and you're closing above it consecutively, you're not in a bull market. You're just in you're in a bear market. It's a key indicator for a lot of traders who use moving averages. And again, if you get rejection, the price starts to come down. This 50 EMA is going to start coming down too. 200 EMA is going to take some time to come down, probably around four times the amount that the 50 would. And by the time that the 50 comes down and we see a significant push to the downside, death cross, JWeb, and a half now. Will that come into February? Most likely. I don't think it's going to come tomorrow unless the price goes to zero. But definitely think that we're going to see this into February, into March. We see that the stochastic RSI on the weekly is extremely overbought. I think we're going to be coming down nicely. I even did this right here. It's kind of a weird parallel channel. Let's pull this up on the daily. We're making higher lows and higher highs. Obviously, we haven't done that here. We'll probably come back up again for liquidation at some point, either tomorrow, Wednesday, or sometime this week, as liquidations will continue to rise. But when I see this
real quick, do you remember the last time that we saw death cross? I'd be interested to kind of see what happened there, how that setup is similar to this one, and then what the effects of the previous death cross were. We don't need to look at it right now. If you want to look that up for Thursday, that's fine. But I'm just curious, what we've seen in the past and, how big of a drop we could potentially see if it happens this time around. Yeah, that is getting close.
Oh, it's extremely close. You know what the worst part about this is? I saw, again, I follow tons of people on Twitter and YouTube. I'll watch tons of videos. And Ben Cohen, a lot of people who watch him, he just put out a tweet that says it looks like 3 points all meeting at all together. And I'm like, that's just ready for an explosion. The 50, the 200, and the price all near each other. And we have FOMC on Wednesday. You're just asking for trouble at this point. And you're overbought and you're seeing tons of bearish divergence. This is just so insane. This is seeing the universe being made, JWeb.
I mean, it's like seeing it's the Big Bang all over
again. It is the Big Bang.
Kevin's Big Bang. Okay. So what you're telling me is I should sell everything I have right now so that I can buy the bottom of Bitcoin when the death cross happens?
Well, let's get into some historical data so you can see a potential timeline for what could happen. All right. So I was looking at Twitter, and some guy pointed out, take a look at July of 2018. So naturally I did, and I look at it. I'm like, wow, son of a. Well, I didn't say that, but I came over here and I looked at it, and I was like, okay, let's see the bottom. So back here in June of 2018, so this pump right here. It's about a 45% pump that we saw, 45% in the middle of a bear market, right? And it lasted about, let's see, from here to there. I think it lasted, I have it in my show notes. Yeah, it was July 2018. We shot it from 5,748 all the way up to 8,486. It's a 48% move in a matter of 30 days. But 20 days after the peak of this, let me see if I can pull it up. 20 days after the peak of this, we came down significantly. We came all the way down. It's about a 30% retracement, and we hit here. And then we just traded for 90 days, so about 3 months, right? So we went from, in 30 days, we shot up. In 20 days, we came down. In 90 days, we went sideways. And on the 90th day, that's when we saw November into December of 2018, and that's when we saw the mass, 51% drop for Bitcoin, and we came down to the bear market bottom. So that's a really weird timeline because right now we're obviously 30 days into this pump about, we started around early January, towards the end of the month. We're seeing FOMC. Could we see a 20-day drop in February? And then maybe we just trade sideways a little bit. And then once we get out of Q1 and we start seeing those earnings and everything like that, could that just be the capitulation event where price comes down all the way and that's the bear market bottom? It's really interesting how it's playing out. And again, I don't see a lot of demand for. I think we're just seeing tons of liquidity chasing. So that's one potential timeline that I saw. It's really interesting. Do I think it's going to happen? I don't know. Potentially could. I think it's likely that something similar to this happens than it doesn't. again, I'm just not seeing the demand. I see that we're getting rejected off the 200 EMA. This is just, I don't know. This just seems like the recipe that the market tends to follow when it's getting towards the end of a bear market, when everyone starts to feel bullish.
Yeah, there's like that exhaustion of, seeing the price go down and everyone just like so desperately wants it to go up.
Yep.
And that's when, when the rug gets pulled out, everyone is just like, never mind, this is never going up again. We're just going to be in this type of market forever. So yeah, that 3-month time frame of a 20-day pullback and then 3 months trading sideways, that also kind of lines up what we've been talking about with, a couple more rate hikes, maybe the Fed pauses, and maybe during that pause, we get some bad data that shows that like, hey, inflation hasn't peaked, or the increases aren't in the rearview mirror, as they love to say. And that could be the capitulation right there, is everyone's just like, inflation's never going down. We're never going to be able to lower rates again. It's just how it's going to be. And people are just done at that point.
Most definitely. It's again, the psychology of this game is it's really fun because the market will make you think whatever it wants you to think, and then you'll just get destroyed because you'll turn on your own convictions.
Yeah, good point from Ace here as well, doing a little bit of sleuthing, looking at what the biggest BTC holders are doing, and they're not accumulating, so they're selling. They're not adding more to their positions, and those people are smarter than me probably. So I'm at this point I'm not trying to sell them my tokens near the bottom. I'm not trying to acquire more either.
Exactly. They're the smart money. They're not going to sell at the bottom of the bear market. They're not going to give retail the opportunity to make money off of them.
Nope. Anything else you want to talk about with BTC before we wrap it up with ETH?
Yeah, let's just pull up BTC dominance real quick, and then this is going to go right into ETH. So I'm just going to transition. We see that Bitcoin dominance has been making pretty good moves to the upside. Obviously, this is Bitcoin's strength against other risk assets, and risk assets, I mean crypto. Let's see, from here, this is on the weekly. So from November, right around FTX, to where we are currently, it's been about a 12% pump, which is pretty good considering, BTC dominance has been getting wrecked since 2021. Like we just saw it shoot down from all that high there, which was, let's see, to the low, about a 47% drop. And that height was around 73, 74% of dominance against the entire crypto market. As Bitcoin dominance continues to rise, that necessarily means that, the influence it has over other coins and sentiment in the space, Bitcoin pumps, everything goes up with it. And if it dumps, everything's going to get dragged, and it's most likely going to be more bloody than Bitcoin itself. And that's what I was looking at. And I still think that there's plenty of room to the upside for Bitcoin dominance. Not on the weekly. I think we're getting close to a point where we're going to come down a little bit more. Obviously, that's natural in a bear market. But I wanted to look at the daily, because the daily looks like there's still plenty of room on the stochastic RSI for it to come up. And we're currently above this level of what would be resistance around 44.5, or we're trading right at it. So if the daily has a little bit more momentum to the upside, could we see maybe like 46, 47%? And if that's the case, everything's going to just, if whatever Bitcoin does, it's probably going to follow a little bit stronger than it normally would, or it has in this entire bear market. So let's look at ETH real quick, because this plays into this. ETH got a little bit of a pullback today. Obviously, it's under 16K now. So very interesting. It looks like it's also, I just noticed this, looks like it's forming a bit of a pennant. I don't necessarily know if that's going to be bullish or bearish. I'll have to look into them and provide you guys that on Thursday. But for right now, I can see that we are above the 200 EMA on the daily, and the weekly, I believe we closed above the 200 EMA a few times. But I was talking, as I was doing my show notes, I said I wouldn't be surprised if we get a bearish engulfing candle this week, and clearly we got it today. We got it right here. You see that this candle came up, bearish engulfing, it's all the way down, bounced off the 200 EMA. I do think that this weekly candle will close below the 200 EMA. I think this was a fake out, and it caused a lot of people to go long here. People expecting 2,000, 2,400, 2,800 Ethereum. I don't see that. I don't see the demand for that. even when I look at the volumes, I can see that the volumes are extremely low. Like look at FTX's volume, this massive candle, and we see this huge volume. And then we see this pump right here, and the candle per volume, it's like low demand, but the price is still shooting up exponentially. That's trappish to me. I wouldn't necessarily buy something like that. That's my personal preference. But yeah, we're seeing this. I think a lot of people went long above this 200 EMA, and we were seeing tons of liquidations when Ethereum shot up. It was leading the liquidations for everything across the board. It was beating Bitcoin even. And when I see this, I wouldn't be surprised if Ethereum ends up leading the liquidations if this ends up being a trap. And FOMC comes back 25, but hawkish, or get tons of bad earnings this week. I could see Ethereum easily leading the pack for liquidations to the downside. Again, that pairs with Bitcoin dominance. If Bitcoin gets pretty bad, obviously altcoins are going to get destroyed as well. The money's going to flow right out of altcoins, in my opinion. That's what I would assume. And I say we close way well below this 200 EMA on the weekly, and then at that point, we got to find support at some of these levels, whether that's 1338, which we were finding resistance at for a period of time, or we even close below that because the macro just looks so bad. But I think this was a bit of a trap up here when we closed above the 200 EMA, as we saw that we got rejected from it here. We got rejected from it when we shot up above it. It came right down. And I think that, this was 100% just trapping people, making people think that we're going to higher levels. And ultimately, this week's going to be pretty telling considering how much we have to look forward to in terms of financial data.
Okay. Yeah, I'll be interested to see how much, these earnings really do impact crypto. And, as we get into the FOMC meeting, I think we're going to get a preview as to what to expect, these coming months or year. Like maybe Powell does come out like extremely hawkish just to put the fear of God into the market a little bit. And because I think that's what he like. We have seen it before, like at Jackson Hole last year. He was people were surprised by how hawkish he was, and it may be one of those things where he's just like, screw it, I gotta put the fear of God in him.
Yeah. So my thing is, if you see a trailer for the movie Cocaine Bear before Powell's speech, that get out of the markets. That's just him. The U.S. is trying to make as much money back as they possibly can. They're taking all adverts, and they're letting you know, hey, this is going to be pretty bad. Obviously not financial.
Not going to lie, I kind of can't wait to see Cocaine Bear. I think it's going to be absolutely ridiculous. Completely off topic, but I got to see it. Like, it just looks so crazy. I got to watch it.
I know. I've been giving myself the nickname Cocaine Bear because I will not turn back on my convictions that this market is going to shit. So I will see it. I used to be a visual effects artist where I used to do like 3D animation and stuff like that. So seeing the bear versus like the one that they use in The Revenant and other stuff kind of makes me upset. But at the end of the day, it still looks like a pretty fun film. I'd be interested in seeing it.
All right. We're going to wrap it up there today. I know everyone tuned in to get our takes on the market and the movie Cocaine Bear, and we've achieved both of those goals in this show. So we're going to be back Thursday afternoon. We're going to discuss how the markets have played out. By that point, Powell will have spoke. We'll have gotten more earnings. We'll have gotten more economic data. We'll be looking at the Friday jobs report. So crazy week ahead. It's one of those weeks where if you're got a long-term perspective, if you're not over leveraged, you can kind of enjoy the shenanigans and all the craziness. If you're over leveraged, if you're just focusing on what's going to happen in the next week, it can be very stressful. So I'm happy to be in the former. In that situation, I'm going to enjoy how this all plays out, listening to all the pundits talk, listening to the analysis, trying to decipher the signal from the noise. And this is where, the market is a lot of fun and it becomes, the game that I really love to be a part of. So let's have a good week. Let's not go crazy. Stay level-headed. Don't make emotional decisions. Don't try to swing trade some of this volatility because it's going to be all over the place. And we'll be back on Thursday. Kevin, any final words?
No, I think you said it perfectly. And if anyone's a WWE fan, it's time to play the game, Triple H. So this will be an exciting week. I'm looking forward to it. And this week is like Kevin's WrestleMania. Like, he is heading into WrestleMania this week, just full of piss and vinegar, ready to kick it in the nuts. I couldn't agree more.
All right, that's going to do it for today. We'll be back Thursday. Thank you, everybody, for watching. Whether you were live or watch the recording, we appreciate you. Hit that like button. Subscribe to our channel. If you find us informative, entertaining, neither, just send us to, spread the good word. We want to try to help as many people as possible. So for Kevin, for the team at FLOLiO, I am Jeremy. Have an awesome week, everybody. We will see you on Thursday.
Stay strong.